Hello, this is Jed Brewer with Study Groups and Below the Line Club. I really appreciate having you on the call today. We're going to be talking about credit and cyber insurance and best practices. So as we motivated this in our marketing piece, we kind of say, fool me once, shame on you, fool me twice, shame on me, which is an old adage I remember being told to me growing up by coaches when I'd make mistakes out on the field. But there's some mistakes that are big that we don't want to make even one time. And as we think about a major customer who may go bankrupt, that can really hurt our company, or if we have a major intrusion in our company due to a cyber attack, that can be quite disruptive, both for our reputation as in the industry as well as financially for us too. So really pleased that we have experts on the call to address best practices that relates to both of those events, whether it be credit risks that we share or cyber risks that sadly seems to be increasing out in the industry for all of us. On the credit side is Corey Watson. Corey's president of Lakel Insurance out of Fort Worth, Texas area. And Lakel Insurance works with a lot of marketers in our industry as well as other industries, but on purchasing credit insurance. So when bad events happen, there's ultimately a fallback. So Corey's going to talk some about just what is the state of the insurance market now versus the pandemic, pre-pandemic, and also if you're using credit insurance, what your broker should be doing to advocate on your behalf, some tips and tricks as it relates to that. And then when we turn to the cyber side, I'm going to have Freddie Johnston, who's Vice President of Holmes Murphy, and Sonia Kozel, who's the account manager at Cowbell Cyber. And Sonia is going to step through in detail more about what are trends in cyber markets in terms of where we're seeing claims come from and the kind of tools that you should have access to. The goal is not to have a policy to fall back on. The goal is to not have an event that you don't need the policy to fall back on. So sharing some tips and tricks around how do we avoid events and be mindful at the same time, but be protected too should they happen. So that's the game plan for today. We'll dive right in with Corey at Lakel Insurance, but we want this to be as educational as possible. So as we go through, if you do have questions, I have you on mute, but please type in the GoToWebinar dialog box. I'll be able to see that question and I'll relay it to our panelists as we move along. So Corey, I just shared my screen with you, and hopefully you can get your presentation up. It looks like it's working on our end. So Corey, with that said, I'm going to turn the floor over to you and let you share with us a little bit more about things we need to know about credit insurance.
Thanks, Jed, for setting all this up. I appreciate the time.
Absolutely.
I'm going to go through. Really three items here. The first part would be, what is credit insurance? Because I feel that there could be some folks on the call that maybe still have never heard of credit insurance, or they have some questions about what the product is in general. Then we'll talk, like Jed was saying, about a lot's changed in the credit insurance world, about how it's the current state today versus 12 to 14 months ago when the pandemic started. And then, like you said, some tips and tricks about if you currently are using credit insurance, what your broker, agent, or however you purchased it should be doing. Lastly, I'll wrap up with some actual policyholders in the fuel industry, clients of ours, case studies, sort of how they used credit insurance in the past, in the last 12 to 18 months, how it's worked for them. So credit insurance, without overthinking it, it's really just an insurance policy that you purchase that guarantees your receivables. So you're going to buy a policy, you're going to invoice a customer, and if that customer fails to pay you, whenever you deem it uncollectible, then you can file a claim. The insurance company will pay you for whatever's owed up to the credit limit, and typically 30 to 60 days. from the time you file the claim. So it's just an insurance policy in that regard. It covers slow pay and no pay. So they could decide that they don't have the money or don't want to pay you, then the policy would kick in there. It also covers bankruptcies, whether these be formal or informal bankruptcies. It would cover that as well. It's used for a multitude of reasons, and I won't get into every one of them, but I will say that a few of the reasons would be for faster credit limit approvals. So these companies that purchase credit insurance, they will take their customers or their potential customers, and they'd run them through a database, and they could come back and it could tell them how much credit they're approved for. So it's sort of like an extension to companies' credit departments. So it helps for sales growth. There's a big bank financing aspect to this policy as well, where companies will come in and they'll buy credit insurance as a way to get a higher advance rate on their lines of credit, help them eliminate concentration ratios if they were to pick up a big contract or a customer, or maybe borrow on foreign receivables. There's also some situations where you can get better terms from your supplier by structuring a policy where you can insure yourself that you're going to pay your supplier. So there's all kinds of different reasons, but those are just a few of the reasons that go along with strictly just the risk side.
And Corey, just before you get into the state of the industry real quick, I think you touched on it briefly, but I've heard a common reason people buy credit insurance is it helps them potentially take on gallons or new customers that they otherwise wouldn't have. Do you see that occurring a lot?
It's a huge part of it, because there's these C-stores out there, and they don't have a lot of credit information. So if I'm a jobber and I'm selling to a C-store, and I just don't feel comfortable selling a couple loads to them, well, so we structure a policy to try to insure that risk, because it's a true risk, for some of these companies. Or you have a certain customer where you're kind of at that threshold on how much credit you're willing to give them, so you can use it to stack what you're comfortable with. You can go above that by expanding the credit limits, which makes more gallons. So these policies are supposed to pay for themselves if used properly.
Yeah, thanks, Corey, for explaining that. Yeah, go ahead and trends.
Yeah. So there's good news and bad news on this slide here, but so the carriers, all of them, they paid massive amounts of claims in the last 12 to 14 months, like I was explaining. I won't mention the carrier, but one of the largest insurers out there, just in the United States, they're a global company. Most of these carriers are global, but just in the USA, they paid 5,000 claims last year, and their claims was up 75% from just a typical average year. Normally, this carrier pays out about $130 million in claims per year, so they paid $225 million in the last year. So it's up 75%, and that's the highest amount since the company's been around, and they've been open in 129 years. So it was a big year in losses, although it was actually lower than what they had forecasted. So that sounds like a big number, but it wasn't as bad as it could have been, according to the folks from the carrier. They came in and canceled certain industries. There were some carriers that said we're completely getting out of oil and gas. So if somebody has a policy today, they may have seen that's on the call. They pulled coverage in bulk. They came in and they would take if you're a particular business in this industry, they may just withdraw credit limits. They thought it was too risky, and they would pool 100 customers at a time, and it was very frustrating for policyholders. They increased rates. At renewals, deductibles were added, co-insurance limits changed, and it really had a shake-up on a lot of the policies over the last 12 months. But I would say that we, from what I'm understanding with the carriers and what I'm seeing now, is that we're kind of on the tail end of that, and and the carriers are coming back. The good news is they're being way more aggressive. We're getting limits approved now that we would have never been approved 6 months ago, and they've upgraded certain industries. So now the oil and gas is totally in play now, like it may not have been 7 months ago for some of these carriers. They've increased their capacity. They're willing to take on more risk for certain buyers, and then the rates are definitely coming down and decreasing. So we have some more flexibility, and that's good news.
So the rate shot up. The rate shot up,
yeah.
Corey, but now they're normalizing or coming back down. Is that right?
Yeah, they are. I mean, it used to be for years. It was a third of a penny per gallon. You know, that we would write policies third of a penny per gallon. That's kind of how they always worked out. And then it shot up to where it was 3 or 4 times that amount, and it just didn't seem to make sense, for certain companies. And now they're coming back, and they're closer. They're not quite a third of a penny, but they're closer, depending on the risk and depending on the factor. And there's a lot that goes into it, but it's getting better. Rates are definitely decreasing.
And how's the stress level of these insurance companies, whoever's the money behind all this, with the pandemic, bankruptcies happening, particularly for small businesses? Are they solvent, doing well, or any concerns that we should have?
Yeah, so AA minus, A plus superior rated, AM best. These companies are backed by the largest carrier, for example. They're backed by Allianz. That's their parent company, largest insurer in the world. So there's plenty of money. That's a great question though, but there's plenty of money with parent companies to back these claims, and they have a long history of this, and they haven't lost their rating status. We had one that was dropped down, one carrier, but it was still a B, rated carrier. But primarily the big ones are still A minus, which is good.
Makes sense, yeah. Well, it's good to know the market is normalizing somewhat, because it was an unusual year last year, to say the least.
Yeah, and I'm sure Freddie, the guys at Holmes Murphy can talk about it too. But these carriers, they offer other stuff than just credit insurance, so that helps to keep the carrier solvent and go forward from there. So regarding, I want to talk just a little too about maybe some of the folks on the line that are currently have credit insurance, right? So we come across businesses all the time that they have credit insurance, but they haven't heard of the stuff that let's say we would do for our clients or whatever. But however they purchased a policy, this is what your broker or your agent should be doing for you. And we can give some more tips, after the call if needed. But they should be appealing any of the declined or withdrawn limits that you saw during the pandemic. So if they pulled that limit 6 months ago or 8 months ago, there's a pretty good chance that you could get that limit back, because Euler or Coface or Tradius or one of these big carriers, they may have jumped the gun a little bit. So you should be appealing those limits. They should also be helping to source financials from your buyers. So if you're applying for a credit limit and the carrier is asking for financials, well, the broker should step in there and help source those financials on your behalf, of course, with non-disclosure agreements and all of that in place. They should be training your support staff. There's been some turnover in companies, and if you have one person that's been managing this policy and then someone new comes in, they may miss certain triggers in that policy to have a denied claim. So that it's really important to make sure that you're getting training with whoever's managing that policy so they're up to speed. Especially now, they should be shopping your policy at renewal. A lot of times we see carriers just roll it over to the same, and there's nothing wrong with that, but now's a really aggressive time to shop those policies as they renew. And then they should be applying or looking at applying sales buffers to fuel policies, because as the price of fuel goes up or down, you guys make the same amount, per gallon. So it doesn't really impact. It could impact your credit lines, but you could potentially be overpaying your premium because the sales number changed strictly because the price of fuel went up. So we would look at applying buffers on the front end and the down end to make sure you're not overpaying or underpaying. Reviewing coverages quarterly. They should be looking at them. We do ours 30 days, but at least quarterly you should be sitting down with someone to review your limits. And then lastly, maybe having a risk visit with an actual underwriter from the carrier come to your location. We all sit in a room and say, this is the person making the credit limit decisions. Tell us a little bit more about your company, so they get comfortable approving those tweener decisions where they may not be comfortable approving it. So you put all that together, and it can really enhance the way the policy works.
So Corey, of this checklist that you have laid out right here, do you find one that is commonly overlooked that's sort of the biggest bang for somebody's buck to pay attention to or to request their broker do for them?
Well, I would say the top two would be appealing any sort of limits where you applied or the administrator applied and they came back and were declined. Well, there's ways to get that limit. You just have to frame it the proper way with these carriers and let them understand why you need the limit, and maybe it's a key buyer or maybe it's a temporary limit you need. I mean, there's some strategies behind that. Because that can be frustrating, and that limits the amount of gallons you can sell if you can't get that credit limit. So I would say appealing these withdrawn or declined or limits that were turned down would be number one. But you have to keep up with that. You can't just do it once a year. And then the second would be applying sales buffers, because no one likes overpaying their premium or getting a bill at the end of the year that they owed more premium and they didn't know it. I think those would be the two that I would concentrate on.
And then how many kind of players are in this industry? You've got brokers like yourself, but that are actually there. Is it a relative handful, or are there a lot of people that are willing to lend to our industry or provide insurance, I should say, to our industry?
Well, I would say it's very, very rare to have a property and casualty brokerage company that does a lot of credit insurance. Like maybe even Holmes Murphy, I bet they don't do a whole lot of it. So it's sort of it's a niche, it's a boutique, because it's kind of hard to understand and it's very nichey. So there really aren't that many out there that do it. There's a lot of brokers out there. There are property and casualty brokers, a lot, but there's very few property and casualty brokers that just do credit insurance. So I think there's a big difference there.
Thanks.
I've got a minute or two, and I'll talk about, I guess, just the last little piece here about some case studies, just because I think it's important. And these are live examples that have recently happened. This one's kind of wordy, but the point behind this was, I've got a client. They were selling $2.5 million a month. You can calculate the gallons in that to Borden Dairy, and they received a notice from their insurer that basically told them that Borden's become a severe risk, and we're going to reduce the amount of coverage on Borden Dairy that you have. So that was a large customer for them. They didn't like the news, but they took the advice. They shipped out any existing inventory and dropped their exposure to about $850,000. So they still sold to them. They just reduced their exposure to their credit limit. And then 45 days later, Borden Dairy, they filed for bankruptcy. So it was a big deal. And when that happened, they received a check for $800,000 for the loss. But the better news for the client was that it saved them the exposure of $2.5 million. So it was sort of like I got a phone call as a Christmas present that they actually heeded the advice of the carrier to reduce that cover. So this is just an example of how maybe monitoring, these carriers will monitor your buyers during the year and give you a heads up and say, hey, you might want to reduce coverage. This company looks risky. This is a claim that was paid, a 6-year policyholder of ours. They pay $42,000 a year. We had that broken down. He was passing that cost along per gallon anyways with his clients. So it was working well. But then with the price of oil changed, and they were in the fracking business, and it just didn't make sense for their customer to be in that business. They filed bankruptcy, and we wrote them a check for $425,000. This one was actually paid in 20 days. So it worked out well, and it shows that, they had a zero loss run for a long time and then took a big loss. This is one that the Biden administration has come in, and this is an industry claim where they're saying, in this particular industry, my customer's customer and their ability to maintain operations in that industry has hurt them. and they've filed many claims due to that. It has nothing to do with their personal credit controls. It's strictly the administration of the politics that caused it. So that's an example there as well. And then this last one would be just a fuel distributor virus. They picked up a large government contract. It just blew out the concentration ratio in their bank. Banks like to see a 25% or less concentration with one customer. So it was even though it was a government contract, it was way high on the concentration ratio. So the bank was having concern. What we did is we took their policy, we leveraged it with the bank. We basically took the risk away from the bank, and we guaranteed it by naming the bank the beneficiary on the policy. That allowed the bank to lump that back into their borrowing base, and it actually reduced their borrowing rate at their line of credit renewal. So this is a good example of how they were able to lump that back in the borrowing base, eliminate the concentration ratio. We got a lower rate. They got a 90% advance rate, all for buying an insurance policy that was going to guarantee the payment. So we wrapped it that way.
Well, sounds really good, Corey. Appreciate you sharing those case studies. And for the audience, I encourage you to type in any questions you have. We can address them at the end. One comment that came in, Corey, but before we move on, just said, might warrant mentioning that credit insurance is only good for open account charges in the normal course of business, not for a note receivable on a workout refinancing arrangement or some other reason that a note may have arisen. Can you comment a little bit on that, Corey?
Yeah, so that is absolutely correct. Credit insurance is not a financial guarantee. It would not insure a 3-year note. It would insure a receivable. But there are some creative ways to make a note a receivable. If there's a term and a date, and that kind of gets complicated. But they are correct. It's not going to insure a 5-year note.
Yeah, makes sense. Well, thank you so much, Corey. We'll move on over to Freddie at Holmes Murphy. I'll allow you to share a little bit about cyber, and then we'll turn it over to Sonia, who's along with you. So, Freddie, go ahead.
Perfect, Jed. Thank you. Appreciate the opportunity to visit with everyone today. So, ultimately, I think the discussion stems really with cyber. We spend a lot of time in front of folks in the industry. And quite honestly, the question arises like, where are my biggest pitfalls? More importantly, how do I insure? And too often, I think brokers lead with product as opposed to areas that could be more proficient in their operations. So, over the course of the last 2 to 3 years, we as a brokerage have heavily invested our time and energy in finding the right strategy for our customer and prospect base. So as to say, like if we were talking work comp or transportation, we were having problems, we wouldn't lead with an insurance product. We'd lead with the human capital driving those vehicles, or we'd lead with the rolling stock and how that's managed. So ultimately, what I've asked Sonia to do is come in because we feel like their program and their approach to cyber is so progressive and unique that they're actually giving the tools and the assessments to help individual companies better equip themselves to avoid and reduce loss before any policy would ever need to be called upon. So with that, I'm going to turn it over to Sonia and let her dive into Cowbell's approach to cyber for your industry. Sonia, all yours.
Okay, perfect. Thanks, Freddie. Hey, everybody. Like Freddie mentioned, my name is Sonia Kozel, and I am with Cowbell Cyber. So Cowbell Cyber, we are a standalone cyber insurance company. Cyber insurance is the only thing that we do, so we are very much experts in our field. Prior to coming on board at Cyber, I was in the P&C insurance place on the carrier side for about 10 years. I started out as an underwriter at Berkshire Hathaway, and then I moved over to sales for Markel. And, cyber insurance, it's the newest line of coverage. It's very exciting in terms of insurance. And so when I saw the opportunity to come on board at one of these new insurtechs at Cowbell, I definitely jumped on it. So excited to share with you guys a little bit more about cyber insurance. And then like Freddie mentioned, what you guys can do to be proactively protecting your business before you're buying a policy. And then also after the policy issuance, how we continue to close the loop. So at a very high level, what is cyber insurance? Cyber insurance is insurance to protect your company's data in the event of a breach, right? So again, very high level, but that can mean a multitude of things. That can mean protecting payment information that you're receiving from customers when they're making payment for fuel at your pump. That can mean protecting bank account information from your vendors that your accounting team is paying monthly. That also means protecting your employees' information, right? So you as a business owner, you're legally required to take care and consideration of all personally identifiable information that you hold. So whenever you bring a new employee on board and they're giving you their driver's license information, they're giving you their social security number, their bank account information, you are legally required to protect that information. And in the event of a breach, you are then legally required to pay fines and penalties if that information is put out there into the world, right? So it's very important that every business owner does have this coverage in place. So I wanted to talk a little bit about where cyber claims are coming from. There's thousands of ways that every business can be breached, right? But the number one cause of cyber claims is coming from ransom attacks. So I'm going to give you an example of a ransom attack that can happen to any size business, right? This could happen to an electrical contractor that has 2 people on staff, and it can happen to a corporation that has $2 billion in revenue. The criminals are really not discriminating. So say that little Miss Susie is the receptionist at the front desk, and she's checking her email, and she clicks on a link that she thinks one of her friends sent her, and it happens to be a phishing email. She clicks on this phishing email, her entire system is shut down. She receives a notification that says, I'm demanding $1 million in Bitcoin, and if you do not give me this $1 million, we're going to wipe all of the records that your organization holds. That's an example of a ransom attack. This happens all of the time. The second leading cause of a cyber claim is cyber crime. So cyber crime, the definition is very broad. The most common type of cyber crime is a social engineering claim. So a social engineering claim would be, again, Susie is now not the receptionist. Let's say that Susie is the accountant, and Susie is a fabulous accountant. She pays all of your invoices on time. She's very organized. She never has missed a payment. Well, all of a sudden on May 1st, Susie gets an email from one of your vendors, and it says, hey, Susie, I'm not sure how this happened, but it looks like you're 3 months past due to us, and you actually owe us $60,000. Poor Susie panics. She can't believe that she missed this for the last few months. She absolutely wants to make it right. And in the email from the trusted vendor that she pays all of the time, she sees a link and it says, click here to bring your account up to date. So it looks like somebody she's used to working with, right? One of the people she's very familiar with. She clicks on this link, agrees to send the funds to the bank account that they're requesting. Unfortunately, she's not sending the payment to the vendor that she thinks she is. The money actually went to a bank account in the Cayman Islands, right? She knowingly sent those funds to a person because she was socially engineered to do so. So if Susie would have just paused, taken a second to verify that this is accurate, like the email that she's looking at, she realizes that there was 2 letters switched around, or that a phone number was different. She would have realized that she was not paying the person that she thought she was. If you do not have a cyber insurance policy, there's not going to be any recourse for those funds leaving your business. So 5 myths about cyber insurance. Number 1, I'm a small business and I'm not going to be a target. So a lot of people think, look, I don't need insurance. In fact, that is completely untrue. So 43% of attacks are on small and medium-sized businesses. SMBs are identified as businesses that have between 25 and 500 employees. So that is a ton of businesses. Absolutely, these small and medium-sized businesses are being targeted, and they're being targeted daily. Number 2, cyber insurance never pays claims made. Untrue. Again, 98% of claims that are being filed are being paid. Not necessarily just ransom demands, right? But whenever you have any type of cyber breach, there's going to be regulatory fines and penalties assessed to every business. So say that, for example, we just had a claim, one of our insureds, they were sending out their W-9s to their employees, and somehow, I don't really understand how this happened, but when they were putting them into the envelopes, the social security numbers of the employees were exposed. So they were in like the little clear part of the envelope that anyone could see, the mail carriers could see. That is a covered cyber claim because they were not taking proper care of their employees' personally identifiable information. They were assessed government regulation fines, penalties, PCI fines. So that would be covered under a cyber insurance policy. Number 3, if I buy cyber insurance, I won't have to worry anymore about cybersecurity. Again, absolutely untrue. This is not a cover-all type of contract. There are specific requirements on cybersecurity. And again, we want you guys to think about this as not just a policy, but it's really a lot more than that. We're trying to do everything that we can so that people can work hand in hand with their insurance carrier to help prevent the risk, right? Number 4, data breach endorsements versus a cyber insurance policy. So again, we know over 50% of businesses in the United States do not have a true standalone cyber insurance policy. So if you're on this call and you're like, I don't have a standalone policy, you are not alone, my friend. Most people do not have this still in the United States. A lot of people get a false sense of comfort knowing that they have a little bit of coverage added in on their GL, right? They think, oh, I do have a little bit of cyber insurance. Maybe it's $50,000, maybe it's $100,000. Those limits truly are inadequate in most cases. If you do have a large breach and you have a ransom attack, that $50,000 or $100,000 is likely not even going to cover the ransom that's being demanded, let alone any of the penalties and fines and forensics associated with that loss. So it really is important to evaluate the coverage that you have in place to see if it's adequate for your business. And then number 5, I'm on the cloud. Why should I worry about this? Again, people have a false sense of hope, right? They think that if it's on the cloud, it's not going to be compromised. Absolutely untrue. When cloud services aren't configured properly, there are safety gaps that can occur, and these can happen all of the time. So even if you're on the cloud, again, still very much susceptible to a cyber attack.
So give us some good news, Sonia. I'm looking forward to it.
This is the good news. This is the sunshine, right? So this is what everybody can do starting right now to help improve where they are at as a business. So what we're identifying is called closed loop risk management. So what we think every business owner needs to do is assess their risk, right? You need to figure out where you're susceptible, where do your vulnerabilities lie. You can meet with your IT team, and there are many things that you can do that you probably already have in place, right? Most people already have proper firewalls in place. Next, you need to make sure that you're insuring for the risk. So evaluating the insurance policy that you have in place, maybe you think that you need to beef it up a little bit. Absolutely, that's something that you should discuss with your broker. And then third, improve. We want you to be provided risk insights and recommendations on things that you can do to immediately improve your cyber posture, right? Like this is an ever-changing coverage. Every single day, carriers are gaining more benchmarking information, insureds are getting more savvy on things that they need to be doing to help train their employees and having like multi-factor authentication in place to help make sure that they are protecting themselves as best they can. Cowbell, as a carrier, wants to help you guys do that. So the way that we have done this is we have created what we call Cowbell factors. And so before we even insure a company, we load them into our system and we are scanning their company and taking a look at how secure their systems appear to be. So how Cowbell is doing this is it's really a game changer, and it's differentiating us from other carriers in the marketplace. So we are looking at over 500 different data points. All of the information that Cowbell is analyzing on every single business that we're taking a look at insuring is all public information, right? So it's all external of any firewall that is out there, and it is all publicly available. But we're analyzing over 500 different data points, and then we are stack ranking and scoring each business. So this is just an example of a petroleum group that we have insured at Cowbell that we have loaded into the system so that everyone on the call today can kind of see what I'm talking about. So every company that's loaded in is given their own score. And then, like I said, they are stacked rank against the industry average. So these scores are on a scale of 1 to 100. So you shouldn't look at this and see, you know, the company average that this company is getting is a 71 and oh man, they have a long way to go to get to 100. That is absolutely not the case. So this specific company is doing fantastic. What we really want to take a look at is how is this business performing against the industry average? So for wholesale petroleum dealers as a whole, The 60 point is really the average. So they are well above average with this score of a 71. What all is being taken into account when we're giving them a score of a 71? Well, it's these 7 individual cowbell factors. So we are looking at network security, we're looking at cloud security, Cowbell is looking at the dark intelligence. Some of this is purchased information. So for example, we are looking at Advisen data to see if any of these insureds have had a previous cyber insurance claim. We're going out there and we're looking at social media to see if this business has positive or negative reviews. We're even going as far as to look at Glassdoor to see if any employees have left negative reviews about this specific employer, because if you have somebody in there that's a little bit of a bad apple, chances of them really double checking and being careful about not clicking on a phishing email, their awareness goes down. And then the thing that people get most excited about, right, is the dark intelligence, the dark web. Everybody wants to know what is out there on the dark web related to their business. So when we are loading in any business into our system, we are partnering with a company called Dark Owl. Dark Owl is great, and their sole job is to go out there and see what information is available about an organization on the dark web. So they're looking to see, have any of these employees' email addresses been compromised? Do they have bank account information that's out there that they wouldn't want? Is there credit card information out there, right? So we're taking a look at all of these different things and then giving a score to the business owner. We're not just giving you this information and saying good luck, right? Like, we want to help, again, close the loop so you as a business owner can take the steps necessary to help protect your organization and make sure that you guys are in a better spot than before you started with even expanding your search for cyber insurance, not even placing the insurance, right? Because there's a lot of things that you can do to better protect yourself before you even get the policy in place. So this is a little bit more of a deep dive into Cowbell Cyber. So we give you this scoring. We're telling you what your business scores up front, areas that you can improve, areas that you're doing really well. Again, all of the information up to this point is external of the firewall. So we are never doing any type of penetration testing or anything like that. Again, it's all publicly available information. However, if you choose that you want to engage further with Cowbell, you absolutely can do that. So we have these 7 partnerships available, and there are many more coming soon. So you can see Amazon is coming soon, but we have Google, Microsoft Secure Score, Wiser, already available for any of our policyholders to engage with. And by simply clicking where it says available, you as a business owner can engage with Cowbell on a deeper level. So what that means is you are, in a sense, inviting Cowbell behind the curtain. If you choose to connect with us and engage with one of our connectors, you're allowing us behind your firewalls. You're allowing Cowbell to see insights into your APIs. And then that, Jed, is really where we're able to give you a lot of information and a lot of good news for you as a business owner, because it really helps you take your network security to the next level. Okay, so say that you are a policyholder of ours and you want to take a look at your Cowbell factors. These are those scores, again, that you saw across the top. We're going to take that, again, one step further. We're not just saying, hey, we found this out here and on the dark web about you, good luck. We're going to actually tell you how you can fix these things to help make your network more secure. Also, within the Cowbell website, you guys would have the ability to invite anybody on your team who is accessing your IT. So if you have somebody on staff who handles your IT, absolutely you would invite that person into the system to take a look at these recommendations that we are offering up, because of course they're going to understand it better than most of us. I am definitely no data science expert. And even if it's a third-party IT company that you are hiring to administer your network, they could be invited into the system to take a look at these recommendations. So again, these are very specific things that we are offering up to policyholders to help them make their systems more secure. The goal is always, always to prevent the breach. So as much information that we can give to the policyholder to help make their systems more secure, we definitely want to offer that up, right? We want to work hand in hand with everybody. You know, especially when I came on board at Cowbell about a year ago, the market has changed so much, even in a year. But I used to have a lot of calls with different insurance, not only insurance brokers, but business owners direct. A lot of times, customers, they want to have a call with Cowbell before they're ready to buy the policy, just because it's a new line of coverage for them. They have a lot of questions, and they say, I already have the best IT team in place, right? Like, I have hired the best of the best. I know that I'm doing everything possible. I have every firewall that I need to out there. I have MFA enabled on every single one of my devices. Why on earth do I need more? Well, I'm going to go back to Miss Susie, who can't stop herself from clicking on these phishing emails. The number one thing is employee awareness, right? So it doesn't matter how great your IT team is. If you have every protective measure in place, there is always room for human error. So it's just so important that as many people within your organization get on board with the IT security and employee engagement, and making sure that everybody is more aware in terms of network security. So this is another.
It's interesting, Sonia. I was just going to say, in our captive, Fairhaven, we spend a lot of time sharing ideas about safety, and even across our study groups. And I remember we had one speaker come and they said, never design a system that is 1 point away from failure. You always want to have 2 or 3 things have to go wrong before failure occurs. But I think the key thing with the cyber is just a single click on an email and the system fails. And I don't know how to get it away from 1 point of failure to make multiple things to go wrong. But is there anything that people can do about that to introduce additional things you got to do wrong before it all fails?
Yes, so yeah, absolutely. There are a number of things that people can do to help better protect themselves, and that actually plays into my next slide really nicely. But again, the number one thing that we really need every business owner to understand is it's all about the human firewall. Okay, so again, if your IT team is the most fabulous IT team in the world and they're doing everything right, but somebody in the organization is still not trained to properly not click on a phishing link, there's really nothing that you can do at that point. So that is why employee awareness training is absolutely the number one thing that every business owner can do. There are tons of different platforms out there that you can look into, again, outside of just your standard insurance policy. You can find this on your own. At Cowbell, we have partnered with Wiser. So Wiser is an online security training platform. They are fabulous. Okay, so they're short little videos. They're like 1 to 2 minute videos that you can go in and you assign them to your employees. And I know they're short. And one of the fun facts that I learned in watching a couple of these Wiser videos is that, for example, the human attention span is 7 seconds long. Okay, that's why they wanted to keep their videos short. That's why they're a minute long. That is 1 second shorter than a goldfish. The average attention span of a goldfish is 8 seconds. So they're very aware. It's hard to keep employees engaged. You're sending them these training videos. They don't want to watch them because they want to go back to their day-to-day activities. They're interactive, they are interesting, and they are short, but they are very to the point. So they are helpful in training your employees. Another great thing that you can do with Wiser is you can actually run phishing emails on your employees. So you can send out fake phishing attacks to your employee base, and you can choose how often you want to do that. So you can choose, oh, I want to do this quarterly, or, oh, I want to do this monthly. And you send them out to everybody, and you see that the first time you do it, 17 people click out of the 20 that you sent it to. That's not great. You do not want 17 of your employees clicking on these phishing emails. So if they do click, they're going to get a little pop-up that says, hey, Sonia, this was actually a bad link for you to click on. Please watch this short video and educate yourself on why you shouldn't click. Well, then next month when you do it, only 13 people click, right? So you see that this training is really paying off and it's helping. And the more often you do that and the more aware that employees can become about these risks, the better educated they are, you're really, really setting yourself up for success, because most oftentimes they just don't know what they don't know. So here we go, how to protect your business. Again, we just kind of touched on this, but number one is absolutely the human firewall. Employees must be trained on how to help better protect the business. Number two, back up critical data more frequently. This is kind of what you alluded to also when you asked your question, like you don't want just one thing to cause everything to go down, right? If you do have some type of major breach where your systems are completely inoperable, you want to be able to get your systems up and running back to normal as quickly as possible with as little interruption as possible. So the more often that you're performing these critical data backups, the better position that your company is going to be in. And then lastly, the multi-factor authentication. This is huge, right? Like nobody, we know employees are kind of, they're like, oh, I don't want to take an extra couple seconds, because it does add on a little bit of time when you're logging into your systems. But absolutely, we encourage you to have your employees be using multi-factor authentication on every single system that you utilize. You know, I have this question all the time when I'm on calls with prospective insureds and brokers. A lot of times we have our chief product officer who designed our system, and he can talk circles around me about MFA and why it's so important. But he will say on every single call, it doesn't matter how silly your password is. Your password can be password 123 on every single login that you have from now till eternity. If you have MFA enabled, that doesn't matter, right? Because they're not going to be able, that makes it more foolproof. So definitely human firewall, very important. Backing up your data, equally as important, but MFA, hands down, MFA should be enabled across the board for all systems.
You mentioned ransomware was the number one, cyber thing that's taking place right now, and obviously they can be big sums that you have to pay. I assume most people think they have their data backed up, but is that not true, or are people fooled into thinking they're protected but they're not, and the ransomware still gets them?
Yeah, so I mean, that's a really good question, and it's never the same, right? So there's so many different scenarios that can happen. So if there is a ransom attack and people do think that their systems are backed up, a lot of times, I mean, still, you're able to get a policy even if you're only backing up your systems every 6 months, or you're only backing up your systems quarterly or monthly. That is still such a huge amount of data that you are at risk for losing. And so say that hacker does follow through. They say, you don't give me the $1 million, I'm going to wipe your records. They do wipe your records. Your cyber policy will pay for the re-entry of all of that information. It will pay for the forensic team to come in there and identify where that breach occurred. And it's also going to pay for what we call betterment coverage, because if you have been susceptible for a cyber attack once, the chances of you having a second are much higher than if you were never breached at all. Because if there was a way for them to get through before, again, they're going to see that there are some areas for improvement in your network. And so any carrier is going to do everything that they can to help you not only get to where you were at before, but make your security systems better than they were to help prevent that breach a second time. Another coverage that's built into most standalone cyber policies, it's called bricking. So say that ransom attack did lead to the business losing all of their records, right? They wiped everything from the system and they made all of their computer systems inoperable. They're essentially a giant brick. It's a giant paperweight. You can't turn it back on. Bricking in this policy would pay to replace any of those information systems tied to your computer. So it would get your whole organization new systems to get you back up and running again, to be operating where you were before.
Well, that makes sense. Yeah, it's certainly a big threat out there to us, and you just see big names. And if the big names are getting hacked, to your point, yeah, small businesses aren't immune either, even if the payout to the criminals is smaller at the end of the day.
Yeah, absolutely.
Going back to your Cowbell scores just really quickly, I'm curious, in your experience working with businesses like ours, is there a particular area that you find that businesses tend to be weak in?
Let me go back here and take a look. It's really just different for every business. And because we're taking a look at so many different data points, I can't pinpoint without looking a little bit deeper into this. So unfortunately, I don't have like a definition of that. But when the industry average is 60, most of the time these would be 60. And again, that's just because of you guys in petroleum and these C-stores, there's such a large amount of data that's coming through every day, right? So there's all the customers at the pump, anyone in and out of the store. It's a high number of customer information that's coming through. So I would say that, yeah, probably network security and compliance would maybe be two areas that could be improved upon a lot in that field.
Yeah, sounds good. And I appreciate your best practice recommendations too on particularly employee training and really just trying to create awareness as best as we can. So as employees are presented with challenges, they can identify them and make the right choice that we all want and they want to. Well, Sonia, I appreciate everything, and for the audience for being on the call as well. I hope you found what Corey shared about credit insurance and some practices to inquire of your broker and make sure your broker is doing that on your behalf to be helpful, and some of these tips and tricks too as it relates to cyber as well with Cowbell and Holmes Murphy. So wish you all to have a very good day. And just an FYI, the slides and the recording of this will be sent to you all. And in about 2 weeks' time, we're going to have another webinar that probably will be of interest to this general audience about the employee retention credit and also the Paycheck Protection Program second round. Just some questions around that for anybody who hasn't yet applied. But I think that employee retention credit is a unique tool that not everybody's heard about with some fairly sizable money in there. So the law firm Winthrop and Weinstein will be leading that in a couple weeks. So you'll see more coming out, but hope to see you on that, and have a great day. Goodbye.